What's going on, guys? Dwayne here with My Investment Journey, and I am back again. In this video, I want to talk to you guys about the fact that I'm up $8,000 today in my stock portfolio. This is going to be a video where I'm going to be revealing currently what's in my portfolio. I haven't done one of these videos in a while, and I thought today would be a very good day because I'm actually up $8,000 in my stock portfolio today, and most of it is because of Tesla. And when I say most, I mean 98% of it is because of Tesla, because Tesla actually went up over $100 today. Now, I can't pretend that I've always been a huge Tesla fan and that I've had Tesla shares and stocks since the beginning. I didn't. I actually bought Tesla stocks in October. I think it was October of 2020, either October or August. We'll double check in just a second. Whenever they split last year in 2020 is when I grabbed some Tesla shares. So I grabbed a lot of Tesla shares and a lot of Apple shares. And looking at it now, I should have grabbed more shares of Tesla because I put the biggest holding in my current portfolio right now is with Apple, and then the second largest position is with Tesla. And I should have had them flipped, but you know, hindsight's always 2020. So once again, in this video, I'm talking about the fact that I'm up $8,000 today in my stock portfolio, and as a result, I've actually made 100%, over 100% of the money that I have invested with Tesla. So we're going to take a look at my portfolio. This is a live stream, so if you're in the video watching live, feel free to comment in the live chat and I will holler back at you. All right. But hey, if you're new to the channel, my name is Dwayne with My Investment Journey. And on this channel, I talk about how to start investing in the stock market, and I show you my investment journey. So be sure to subscribe to the channel and click that notification bell so you don't miss a thing. I considered doing this video a little earlier in the day, but I was like, you know what? I need to take a nap because I drive Uber and I have been up since 4 a.m. Actually, 3:45 a.m. this morning. And I've been driving Uber, and so I decided to take a nap. It was kind of weird because I was looking at my account today, of course, my portfolio, and I'm like, yo, Tesla went up quite a bit. I do try from time to time to do some day/swing trading. Recently, it's been more day trading because I don't hold it into the end or the close of the market into the very next day. And boy, am I sorry I didn't hold my current position. I had a position with Lucid Motors from last Friday where I made some money last Friday, and I didn't hold it into today. And of course, Lucid Motors went up like crazy. I actually had 1,000 shares and it went up a couple of dollars today. So that would have been another easy 2,000 bucks or so to make. But that's a different story because I'm doing that on my Webull account. What I'm going to show you guys today is going to be on my Robinhood portfolio. William, thank you, bro. Thanks for letting me know the Tesla split was in August of 2020. I appreciate you stopping by the channel and stopping by the live stream. It's a pleasure to have you in the building, sir. Make sure if you guys are watching this, be sure to smash the thumbs up. It helps the channel tremendously. So be sure to smash that thumbs up in this video. All right. So that split was last August. Now, of course, I'm going to show you guys, I'm going to share my computer screen with you guys here in just a second and share with you what happened today in regards to my portfolio and the fact that Tesla just blew straight through $1,000. It's so funny. I was watching it and I was like, maybe they're not going to get to $1,000 today. Like, I felt like it's something that was definitely possible as far as like, okay, is Tesla going to shoot past $1,000 today? And so I'm watching. And I have a Webull account where I've done some trading, some day trading, swing trading on my Webull account. So I remember looking at Tesla and it was like $993. And I was like, man, you know, maybe they're not going to get to 1,000 today. Certainly not blast past $1,000 the way that they did. I was like, well, maybe they'll get to it. And I saw it at like $997, $999. And I was like, you know, thinking about grabbing some shares on my Webull account just to make, you know, a couple of bucks and sell it, right? but Tesla had already been up like, you know, 70 something dollars. I'm like, yo, 70 something dollars in one day is ridiculous. So I'm going to pull up my Robinhood account right now for you guys and show you guys exactly what's going on. Mr. Sunjohn144, thank you for stopping by the video. Appreciate you. Angela, hey Angela, thank you for stopping by this video. I appreciate you. Angela's actually from another YouTube channel that I have where I talk about credit. So it's a pleasure to have you in the building, Angela. Then we have CoinFam says, regret selling my position with Tesla around 650. Yeah, I mean, I don't know. It's quite interesting, bro. To be honest with you, grabbing shares of Tesla and Apple absolutely saved my investing life. I was very close to giving up just because I was tired of losing, and I was day trading my butt off, and day trading is just way too stressful. I just wasn't very knowledgeable about the stock market or even the psychology of the stock market. I hear people talk about that a lot. And what are they talking about, right? You know, like when I look at a stock now, and the more time you spend looking at one stock or studying that stock, the more easy it becomes to kind of guesstimate, if you will, right? Because day trading has like a bunch of rules and charts, and I'm not here for it, okay? But you can spend time looking at a stock and know that, like, if a stock is going up, it's not going to continuously go up, okay? And I know I'm not going to grab shares if the stock is already ran up, you know, a couple of dollars. And depending on the stock, right, the more time you spend with it, like I know that if Tesla goes up $2, that's nothing, right? Like Tesla goes up and down, you know, $7, $15, $20, $28 daily, you know, so they go up and down in both directions. You know that if you study Tesla, right? And so then you can be a little bit more confident grabbing some shares and taking a risk as far as your money's concerned when it comes to investing. Anyway, I'm going to jump onto my, I'm going to jump and show you guys my computer screen here and show you currently where my portfolio is sitting. So right now it's currently after hours, so the market's still open, but it's after hours. There's some trading still taking place, of course, for companies that have like heavy volume, where you can still grab positions, you know, buy and sell shares. CoinFam says, love the content and keep the grind, Dwayne. Hey, I appreciate you, man. Thank you so much for the kind words and thanks for stopping by. Mr. Sunjohn144 says, what's your other YouTube channel? That other channel is called How to Build Credit TV. Exactly like that. Type that into the YouTube search, How to Build Credit TV. Everything is a word. There's no letters, no numbers in there. How to Build Credit TV. And of course, you'll see me. I'll be in a yellow shirt, you know, probably doing like a thumbs up or something. And you can subscribe to that channel. Jalopy Maximum says, hello, what's going on, man? Thanks for stopping by. I appreciate you very much. Says, I found your channel looking up ARR. Cool, awesome, appreciate you. And I have a love-hate relationship currently with ARR because ARR is the only stock that I'm invested with and that I'm currently down. I'm actually up on every other company, and I think I have 11 companies that I'm invested in as far as stocks are concerned, and I have a couple of ETFs. I'm going to share that with you guys right now. Jalopy Maximum says, my Tesla gains today were crazy, 4,900 plus in one day. That is correct. Mine was like 8,200. At least the last time I checked before the video was 8,200. And once again, I'm going to share that with you guys right now. Angela says, do you have to have Robinhood Gold for the app to fulfill your entire trade? No, you do not. Robinhood Gold is only beneficial to you if you want to basically add more than $1,000 into your account. I think Robinhood, the regular Robinhood, will allow you to have, like, if you deposit anywhere between $0 and $1,000, they'll give you instant access to that money. Now, Robinhood Gold is $5 a month, and it gives you access to having level 2 access, where you can look at you know, people that are going to be buying or selling, potential buyers and sellers. You can have a look at that because a lot of people study that, and they can use that to help determine, you know, what's going to happen with the price. At this point, I only have Robinhood Gold because if I want to add more than $1,000 and I want to have instant access to it, I can do that. And so if you have like $25,000 invested, they'll give you access to up to $25 up to $25,000 if you transfer. Let's say you want to transfer $10,000 to your Robinhood account. So they'll spot you the $10,000 while they're still finishing the actual processing of the $10,000 to your Robinhood account. So you have instant access to it. That's actually one of the better things about having Robinhood Gold, but it's not anything you need. You can buy and sell stocks without having Robinhood Gold. Robinhood is free for the most part, right? Like you're gonna pay. They market it as being free. I mean, I'm pretty sure they're making some money here and there, but yeah, Robinhood Gold is not a necessity at all. Daza says, "Hey bro, I have $5,175 and I'm up 3%. I'm watching in Ireland." Man, thank you so much for letting me know from where you're watching. I appreciate you stopping by. And listen, that is incredible. It's funny because being up 3%, you have $5,175. A lot of people don't see the value in being up, period. Let's say you have $500 invested, right? Of course, it's not gonna be super exciting to be like, yo, I'm up 10%, this is amazing, right? And of course, you're not gonna feel like that's amazing because you only have $500 invested and being up 10% is only $50, right? So like a lot of people kind of devalue that when in reality, it's a win, and it's a win. And yes, it's on a smaller scale, but it's still success. And success doesn't just happen, boom, on a large scale. Success happens on a small scale at first. Success are things that happen on a small scale, step by step. You don't just wake up and you're automatically successful. No, you take steps every single day to get you to whatever you consider success that you might see at the end of the journey, right? Success is not something that you just wake up and accomplish right away. So congratulations to you, bro, and thanks for letting me know you're watching from Ireland. That is freaking awesome. CoinFam says Microsoft, Exxon, and Realty income have been my biggest return so far. So glad I found your channel. Hey, I appreciate the kind words, man. I mean, there's so many people out here in this YouTube space that's talking about the stock market, and by no means am I a guru. I'm just a regular person that is going to share, and I have been sharing my experience in regards to the stock market. That's why I like to talk about the fact that I was down $63,000 basically a year ago. All right, let me jump into, I'm going to share my computer screen with you guys here as soon as I find my window with all my stock market stuff. Okay, so here we go. I'm going to share the screen. Okay, so what you guys are looking at currently right now, be sure to smash the thumbs up if you haven't already done so as you guys are coming in the video, okay? So this is real. This is my Robinhood account right here, as you guys can see. And at the top left, underneath the value of my account's currently valued at $268,322.41. Now, of course, this is going to fluctuate as I'm doing this video because the market is still very active right now. So as you guys can see, I'm actually up $8,505 right now. And like I said, most of that is because of Tesla. So if you look at basically today and what's happened today. So if I hover the mouse over here, so we have pre-market, which is between 8 o'clock for me. I'm Central Time Zone in Houston. So pre-market, I was already up $3,000 pre-market, and a lot of that was because of Tesla. Okay, and so then the market opens for me. It's 8:30 Central Time, and so you can see my journey here, right? I'm like, yo, okay, this is cool. This is cool. Of course, I'm up like $4,500. If I was doing any kind of day trading or swing trading on my Webull account, I would have taken some profits. You know what I'm saying? Because I'm like, I don't know what's going to happen. Part of the reason why Tesla exploded today is because Hertz actually ordered 100,000 Teslas with them. Hertz, the rental car company, ordered 100,000 Teslas, which is really, really cool because that's a big sign saying that like electric vehicles is a way of the future, and they believe so much so in that they're going to invest. And that's really, really good because I think it's only a matter of time. So you see my journey here, my account's going up, 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 and then at around 135, my account was at the highest value that it's been today, which was $269,114.48. At that time, I was up $9,500 in one day, which is absolutely ridiculous. So once again, right now, you see my account, $268,000 right now. Now, what I want to show you guys real quickly is the fact that Tesla is once again responsible. I'm up $8,500. If I click on the Tesla tab here, you guys can see that Tesla, my return on Tesla alone today, right here, I'll highlight it right here, where you see my market value is currently $71,000. Today's return alone is $8,237. Actually, it just changed to $8,268. Of course, it's going to be changing, right? So Tesla's actually now, it went up $115, and in after hours, it's gone up another $2. But my total return on Tesla, which is absolutely freaky, right here at the bottom of the screen, you guys can see I'm actually up $37,000, which is 108%. So this is very crazy that literally the amount of money that I have invested with Tesla, I'm actually up that amount of money right now. You cannot beat that. You cannot beat that at all. I do want to take the time, however, real quickly to show you guys my entire journey as far as what my portfolio is concerned. So it wasn't always sunshine and rainbows, right? So if I click on the 1 year, just to show you guys, 1 year, okay, so this is based on what's occurred in my account. Now, of course, it says I'm up $79,000. Now, that is a lot, okay? There's a lot of reasons why that has occurred. Of course, a lot of that has also to do with some of these things bouncing back in regards to coronavirus. This is when the market was starting to recover. So I'm actually up 42%, which is bonkers. This is not a normal return in the stock market. And I only know this based on what I've heard and what research I've done. Okay. So right here, you can see, and I want to show you guys this because it's very, very important. Well, you can't see it that view. Let's do this view right here. Right here, you can see that I was down at the top left. I was down negative $63,000. Negative $63,000. Okay. My all-time percentage in regards to Robinhood, which is really crazy now, all-time, I'm currently up $21,000. That's funny because when I started investing over here in May of 2020, the top left, as you can see, since May of 2020, I have invested $241,850.30. That's the amount of money that I have put into my Robinhood account since May of 2020. So right underneath that, you see that it says negative $4,399. So way back in 2016, I basically was investing in the stock market way back here, January 2016, and basically I lost $4,400 and I didn't do anything. I didn't invest anything. I sold everything because I didn't know what the hell I was doing. And then I didn't do anything for a couple of years, for basically 3 years until May of 2020. And since then I have invested $241,000. And so as you guys can see, my journey, I went up right here. I was up $265,000. I was lucky. I didn't know what the hell I was doing, but I was up, right? And sure enough, I was down negative $63,000. I like to show that and talk about that because that's real. A lot of people want to only believe in and see and show the results where, everything is positive. As a whole, I am pretty good now based on the companies that I have decided to invest in. So basically what happened was Apple and Tesla were about to split in August, and I was like, I'm not gonna lie, I literally was, and I need to contact my friend. I was literally in the gym exercising, okay? And I still hadn't had a real plan as far as like the stock market is concerned. And I was in the gym exercising, and I'm still trying to figure it out because, of course, my mind is always racing. Like, what do I need to do? What should my next move be? And I still kind of think like that in regards to the stock market. Like my Robinhood portfolio is doing one thing, and then on my Webull account, I'm like trying to make that like a portfolio where I, see how much money I can make. So I have a certain amount of money in my Webull account, and then I'm just kind of trying to grow that account, and it's going extremely well. I mean, when you have a lot of money to invest, things can be a little bit easier. Whereas if you're starting to invest with $1,000 and you're trying to grow $1,000, it's going to take a hell of a lot longer to grow $1,000, even if you know what you're doing, than it will if you had 10,000 or 20,000 or 30,000 or 100,000. If I had $100,000 and I was trying to make that grow, I would just grab more shares. So like on Friday of last week, I was watching Lucid Motors, and I was seeing that the stock moves around a lot. So I was like, all right, I'm going to grab 1,000 shares. And it was like $22 and some change. So like almost $23, right? So because I have a lot of money that I can invest, I grabbed 1,000 shares. So I grabbed 1,000 shares. So it was like $23,000 and change, right? So I grabbed 1,000 shares. And so because I have that much money, if I have a 50-cent increase on that particular stock, that's $500. If I sell because I have a 50-cent increase, that's $500 that I made. Yes, of course, I invested $23,000, but that's $500 that I made for doing what? For having the knowledge, for being able to kind of, anticipate what I believe is going to happen based on the fact that stocks don't only go down and stay down. They always come back up a little bit. Stocks don't only go up and stay up. They always come down as well. So based on that, I was able to make some money over there on that account. So once again, a lot of people only like to glorify when they're winning and when they're doing well. And that's one of the things that I like about the fact that I can show you guys, literally, I was down $63,000 and I felt like an absolute loser because I was like, yo, you could have paid your student loans. Like I owe student loans, and it's not a priority of mine to pay my student loans right now. Like, of course I'm paying it, but like, to pay off $50,000 in student loans and be like, yes, I paid off my student loans. I don't owe anybody. That's just not as appealing to me. Okay. I'm not going to work myself to death to pay off $50,000 of student loans. Let's say that took me 6 years to do that, right? Let's say it took me 2 years to do that. In the same 2 years that I pay off the $50,000, the $50,000 is going to make me more money if I invested in the stock market correctly, right? Than it's going to cost me money as far as interest is concerned. People say pay your stuff off because of interest, right? My student loan interest is 3.5%. I thought that was good until I got a Tesla, and my Tesla's APR is 2.49%. So now I'm looking at my student loan sideways like, man, 3.5, man, that's a lot. So yeah, I mean, for me personally, if it's going to take me 5 years to pay off a car or 5 years to pay off my student loans, in my mind, I think that money is better spent invested those 5 years than to be in a rush to pay off my student loans and save myself, $2,000-$3,000, by paying that off earlier. Whereas with that same 50 G's, I'm going to make way more than $2,000-$3,000 in the next 5 years paying off my student loans if I work like a dog and pay it off. Okay. But of course, different folks, different strokes. You know what I'm saying? So that's just me personally. But yeah, I wanted to show you guys that I can real quickly show you guys all the companies that I'm invested in right now and show you where I am. Once again, ARR, which is Armour Residential REIT, that's the only company that I'm actually in the red. And I'll show you guys that in 1 second. I'm going to jump into the comment section. William says, give me a penny up and I am happy. as a pig in the muck. That's funny, man. That's good stuff. I hear you on that, bro. Angela says, if I lose 2 cents, I'm out. Congrats on the Tesla stock reaching 1,000. Angela, the thing about it is, I was very fearful as well, right? When I was investing back in 2016, I started to invest in the stock market, and I'm going to be 100% transparent. I started to invest in the stock market in 2016 because I was looking for a way to make some extra money so I can pay off the child support that I owed. So I owed, like, at the time, like $21,000 in back child support. Okay. And I was just like, yo, I got to pay this off as soon as possible. And I just couldn't think of a way to do that. It's funny because I drive Uber now, right? And I drive Uber only because I bought a Tesla and I was like, I want to make money, a new stream of income to pay my Tesla car note. I didn't want to take money from where I already had it. So I actually started driving Uber because I bought a Tesla, which is kind of weird. And so then I didn't even have the idea to drive Uber back in 2016. I don't even know if it was that big of a thing, but it probably was. I don't know. So anyway, I started to invest because I was trying to pay off my child support. Like, straight up, I had to get rid of the $21,000 because I needed to renew my passport, because my grandma lives in Canada, and I'm like, yo, I got to be able to go see my grandma. She's one of those grandmas. She's actually going to be 96 this December. December 4th, my grandma will be 96, and she's doing well as you can do at 96 or 95 right now. So that was very important to me, right? So that's why I started to trade back in 2016. I didn't know what the hell I was doing, but I was still going to be aggressive. So when it comes to the stock market, you just have to put your money into the right place, and you have to be patient. One of the best things that you could do is you can invest in an ETF, okay? And I will show you guys, I'll show you right now one of the ETFs, 2 ETFs that I'm invested in, and I'll talk about why I've invested. So I'll start with those 2. And give me 1 second. Mr. Sunjohn says, I like that mindset. I agree with that. Cool, man. I appreciate you, bro. Mindset is everything. And my mind never stops working. I'm always thinking about, like, what should I do? Should I be doing this? I'm very happy with the choices I've made in regards to Tesla and Apple and so on and so forth. Okay, so I'm going to pull this up here, and I'm going to start at the bottom and work my way up. Okay, so I'm going to share my screen real quickly. Okay, so here we are on my screen. I'm going to look up a couple of these ETFs so I can share that with Angela real quick, because I want to encourage you not to be afraid to invest. Okay. Okay, so I'm pulling up a couple of different ETFs here. All right. So the first ETF that I purchased ever is right here, VUG. Okay. VUG is an information technology ETF, and it's basically it's a very risky, air quotes, ETF, but one of the reasons why I decided to get in it is because of the 5-year return. Okay, so currently I have $27,000. My market value is $27,000 right now. When I invested, I just invested $26,000 right out the gate. I think I'll double check in just a minute. So currently I'm up with this 4%, which happens to be $1,000, right? So if I scroll down and show you guys, okay, so what I did was I bought 20,000 first and then 6,000. So way back here, August 10th, I just invested $20,000. I said, hey, I'm going to spend $20,000, and whatever that gets me is what I'm going to get. So at the time, it was $412.28 per share. And then on August 18th, right here, I invested another $6,000, and at that time it was $410.24 per share. So my average cost right now with this particular ETF is $411.78 right here, $411.78. Now, what I want to show you guys is this, the 5-year growth. So if I click on 5 years, the 5-year growth as of now is 255%. You can see that right here at the top. Underneath the price, 428. Then you see in the last 5 years, it's gone up $308. Percentage wise, that's 255%. Okay, That's very encouraging news. One of the reasons why ETFs are good, especially this one, is that they are diversified. So I'm on the Vanguard website. The ticker symbol is VGT. So if you were looking it up, you would look up VGT on Robinhood, right? So I'm going to scroll down. Now, of course, you see here it says more risk, more reward. It's on the highest level you can be. It's number 5. Out of 5, it's a 5. Okay. There are currently 342 companies in this particular ETF, and here are the top 10 companies. Apple is number 1, Microsoft is number 2, Nvidia is number 3, Visa, MasterCard, PayPal, Adobe, Salesforce, Cisco, and Intel. Okay, so these are pretty much tech companies, but you know Apple, you know Microsoft. Okay, in a way, when you see this, in a way, they're telling you, I don't want to say that they're telling you, but these are solid companies, okay? And they're so solid that this is the biggest chunk of our index funds. So if we have 342 companies, these top 10 companies, we believe in them the most, that we're putting the most investment, or the biggest piece of the investment pie, if you will, in these companies, okay? And Apple has the number 1 spot, okay? So this also, let me show you here. I like the fact that they give you a 10-year hypothetical situation on the website. So right here, they're telling you if you had invested $10,000 back in 2011, 10 years ago, as of September 30th, 2021, your $10,000 would be worth $79,764, blah, blah, blah. Okay, so 7 times your money. 7 times your money. Also, one of the things I like about this chart over here is it gives you the returns. Of course, it gives you the last year's return, the last 3 years, which is at 26%, the last 5 years, which is at 28%, the last 10 years, which is at 23%, and then since its inception, which is 2004, the return has been 13%. Now, the reason why that's kind of important to know is because if you had $1,000 invested, okay, 20% return on $1,000 would be $200. Once again, it's not necessarily a lot. It is a lot, but it's not necessarily a lot because it's only $1,000. If it was $10,000, a 20% return would be $2,000. If it was $100,000, a 20% return would be $20,000, right? If it was $1 million, a 20% return on $1 million is $200,000. So if you have information, it's insanely powerful. Like, you know, if I won the lottery right now and I won, let's say I just won $1 million, right? I would put my $1 million into this particular ETF. Or if I wanted to spread it around, I mean, there's really no need to spread it, but let's say I wanted to, right? Because this ETF is 342 companies. 342 companies. So it's diversified. If one of the 342 companies file bankruptcy, you're not going to lose all your money the way that you would if you had invested in only one company. Okay, and believe me, believe it or not, the very first experience that I had in regards to the stock market when I started investing back in May of 2020, I invested in this airline company. It was a Latin airline company, and literally I invested, and I think it was like a Friday or something, and the company filed bankruptcy on Monday. And Monday was a holiday for us in the States. It was like Labor Day or something like that. Okay. And I watched my money go down like $3,500, and there's nothing I could do. And it sucked. And it was just one company, right? Now, of course, how I wanted to invest was a lot different than it is now. Okay. So I hear what you're saying as far as being afraid. You know, if you lose 2 cents, you're out, you're selling. But the thing is, you have to be confident in the companies in which you're invested. So if you invest in an ETF such as this one, you know that they're solid companies. I mean, you could invest in Apple directly. I mean, I have invested directly with Apple, and that ETF VGT also has chunks of it is invested in Apple as well. So I've invested in Apple directly, and of course the ETF has investments with Apple also. Another ETF that I just got was VUG. This one here. This one is a Vanguard Growth ETF, and I invested basically like I think it was $11,948, and my return right now is I'm up $958. Okay, so this particular ETF though, which is really, really cool, it shows you here on the Robinhood website. It shows you the last year's return, the last 3 years, 22%, the last 5 years, 22%, the last 10 years, 19%. Since it was established, 11.67%. Okay, I like that. I mean, that's huge. To someone getting started, it doesn't necessarily mean a whole lot. If I go to the Vanguard website here, so this one is on a scale of 1 to 5. Well, you guys can't see anything because I'm not showing you my screen. This one is 4 on a scale of 1 to 5. Okay, and if you had invested $10,000 in 2011, 10 years ago, the $10,000 now would be worth $58,000 right now. Okay, this one currently has 287 companies in it, and look at this. Here are the top 10 companies that they have the biggest portions of the 287 companies. So out of 287 companies in this ETF, VUG, here are the top 10. So you have Apple, Microsoft, Alphabet Inc., which is Google, Amazon, Facebook, Tesla, Nvidia, Visa, Home Depot, and Walt Disney. Now, the only one that somebody may not know is Nvidia, which is like a video graphics company. It's a tech company, okay? But we know all the other ones. Like straight up, Apple once again is number one. I mean, they're showing you how awesome Apple is. A lot of index funds has Apple as their number one. As a matter of fact, I'm going to go over here and show you guys my current position with Apple, and I'm going to show you Apple's returns in the last 5 years. I'm going to open this in a separate tab. Okay, so we're opening here, and as you see, it's pulling up eventually today. Okay, cool. So I'm looking over at Apple, and I'm smiling because you see my current market value is $92,000. Apple is the biggest portion of my portfolio, right? So Apple is 34% right here, 34% of my portfolio. I'm looking like, man, I should have had this chunk invested with Tesla, but you know, you live and you learn. Okay, so if I look at the last 5 years for Apple, okay, the last 5 years, Apple has gone up 407%. So underneath the price, you see 148.65. Then you see it's been up $119, which happens to be 407%. I like Apple a lot just because everybody is very familiar with Apple, right? So 407%. Let me give you an example of what that would look like. If you had $1,000 invested with Apple, 100% of $1,000 would be $2,000. 100%, another 100%, which would be 200% of $1,000 would be $3,000. 300% of $1,000 would be $4,000. And 400% of $1,000 would be $5,000. You can't put $1,000 into your bank account and 5 years later your $1,000 is now $5,000. Okay, Apple, I think, is a really solid company to invest in just because I don't think they're going to go bankrupt in our lifetime. Our, as in you and me, you know, maybe my kids, maybe. I mean, I don't see it happening, but you know, anything is possible. Apple is just a really, really solid company. Okay, so just kind of show you guys here real quickly what I have as far as the different companies that I'm invested in. I'll show you guys that, and I'll show you you know, basically that I'm only red in one company. So I'm going to open the tabs here at the top of the screen as I'm talking to you guys before I pull it up. And then I'll show you every single stock that I own, which is not really a big deal. I mean, honestly, owning individual stocks, and this even shows that my vision for investing has changed as I've been investing. Initially I was trying to become a day trader, right? Because I thought I was so smart and it's easy and I'm going to make a lot of money. And then, of course, after I got smacked around, I decided that day trading was way too stressful for me. I'm just not wired that way. And I decided to do some dividend investing. I was like, okay, I'm going to hop on this dividend investing type deal. And then after doing that, I was like, I learned a little bit more about ETFs, and I learned about like growth stocks that they may pay a dividend. They may give you a dividend. It's probably pretty small, but it's going to grow. And so you get the same results, right? But you probably get it quicker if you invest in a growth company, because you'll see your portfolio grow quicker than 20 years. Like in 20 years, my portfolio is going to be insane. Like I really don't even have an idea, right? Like it should be easily over. It will be easily over $1 million, over $1.5 million. If I don't do anything and I don't add one more cent to my account, it will probably be valued over $1.5 million easily. Okay. And then of course the dividend paying stocks will be paying me dividends. Now there's a couple of different ways to think about your portfolio. Like if you invest in like growth stocks like Tesla and Amazon, they don't pay dividends, right? But if your portfolio continues to grow, and if on average your return from the stock market is between 8 and 14%, once again, if you had $1 million, 8% of $1 million is $80,000. Okay, so if you're getting between 8 and 14% every year, and you want to take 6% of that, that's $60,000. $60,000, like, when your retirement age should be a decent amount of money to live off of, especially since you shouldn't have a mortgage. You know what I'm saying? Like you shouldn't be paying mortgage. Okay, so I think I have them all open right now, and I will just go ahead and show you guys every single company and kind of where I'm at. All right. So right here on the screen, I'm going to start at the very top. At the top right, you can see it says PSEC, then AGNC, then ARR, then STWD, and just work your way down the screen here, right? So the first one I have up is PSEC. So as you guys can see, Prospect Capital, my average cost per share is $7.20. I'm currently up right now 17%, which happens to be $1,800. Okay, you can't beat that. Like, super excited. I was able to get in there at a decent time. And by decent time, I just simply mean that, like, when I bought a bunch of shares, the cost was pretty low. Okay, so I'm very happy about that. And this is a monthly paying dividend company. So if I try to show you guys basically the first time I paid, okay, here we go. Okay, so you can see here, February the 11th, at the very bottom of the screen, I invested $10,000. Boom. And at the time, it was $7.14 per share. Okay, that was it. I invested $10,000 once. I didn't invest anything else. The other purchases here are dividends. So March 21st is a dividend. Every single one after that is a dividend, all the way up the screen. Okay, so dividend payments started at $84.04 on March 21st, and I have my most recent dividend is for $88.48. So that's like a $4, call it $3.50 increase. But very, very happy. I'm in the green with this one overall. I cannot complain at all. Okay, Prospect Capital. Okay, that's the first one. The next one on the list is AGNC. AGNC, my current market value is $3,200. I'm currently up 11%, which happens to be $333.33. Very, very happy about this. I should have bought more shares of this one, just because this is a monthly paying dividend as well, monthly paying dividend company as well. And this is a REIT, a real estate investment trust. So is Prospect Capital. Okay. So it has to do with real estate. But if I show you guys my order here, you'll see, let me see. Okay. So scroll down. So I basically made two big chunks. The first chunk was here for $1,000. And then the next chunk was $1,551. Okay. The next one is basically a dividend payment. And then I did grab some more shares here for $121. But other than that, let's say $22 of dividend payment here. Scroll up, $23.25. Okay. And this one pays monthly as well. Here's my love-hate relationship with Armor Residential REIT. So Armor Residential, I think I invested originally like 10 G's or something like that. As you guys can see, my total return is negative $944.47. I'm down 8.90%. My average cost is $11.80, and currently it's trading for $10.75. Okay, so it's interesting. I'm down $944 here with Armor Residential REIT, but overall, I'm very, very in the green. So I struggle daily with this one because I'm like, I could sell these shares and invest in an ETF. I can sell these shares and buy more Apple. I mean, there's so many things that I could do as far as this is concerned. Now, this one does pay monthly dividends, and for the time being, I'm holding on to it. We'll see what happens. We'll see what happens. If there's a super duper red day or several red days in a row, and I feel like my money would be better spent somewhere else, I would do that. I have had this position for quite some time, and literally my result is negative $944. So that doesn't feel good. It kind of reminds me of my AT&T position. I was negative in that position as well, and I finally sold it. Okay, so you can see here I invested back in January, $1,614, and I invested again in February, $5,776. Then I have some dividend payments. Okay, here we go. Then the last investment was $2,600 in March. Okay, and then I've basically had dividend payments of $84, and now I'm up to $89. Now the dividend payments, like, yeah, it's cool that I'm getting them, but because I'm down overall $944, I mean, it's almost irrelevant that I'm getting the dividend payments, right? Of course, Robinhood grabbing more shares is going to eventually have my average cost come down from $11.80 eventually, right? Or I could just grab more shares now. If I wanted to drop another 10 G's and buy more shares, I could lower my average cost. But I don't think I'm going to do that. I don't think I'm going to do that. Okay, so the next one up is going to be Starwood Property Trust. So this one currently, my total return is I'm up 34%. Wish I would have grabbed some more shares. So you guys can see here, I'm up 34%, which is $1,900. Very, very happy with that. If I scroll down here and show you guys when I bought my first chunk, okay, so you guys can see back here, January 8th, $1,700, January 13th, $3,500, and then I didn't grab any more shares. The rest of these are dividend payments. So April 15th is a dividend payment for $133. This is a quarterly paying company. July 15th, another dividend payment for $135. October 15th, another dividend payment for $138. Okay, the next one up is Gladstone Capital. Overall, I'm up $773, which happens to be 6%. Very, very happy about that. This one does pay monthly. The next one up is Kinder Morgan. Currently, I am up 22%. This is another one I wish I would have grabbed some more shares. So I'm up 22%, but because I don't have that much money invested, 22% is $362. Once again, I think it's very, very important for us to just be grateful that we're up. Whenever you're up, it's a win. Okay, as long as you're in the green. So like, even though with that one I'm up 22% and it's only $362, man, that's still a lot compared to if I had that money sitting in a savings account or a money market account or whatever type of account. If I don't get a 22% return in a year's time, you know what I'm saying, then this is way, way more incredible. And of course, the reason why there's such a huge percent as far as return is concerned is because, of course, you know, the stock is still recovering from COVID, right? Okay, all right, so the next one is going to be Exxon. Let me share my screen with you guys real quick. Here's Exxon, and currently I'm up 45%, which happens to be $2,159. You already know, I wish I would have grabbed some more shares, but I didn't. The next one is Huntington Bank. Currently I'm up 34%, which is huge. Happens to be $442, right? I didn't have that much money invested, so 34%. 34% is 34%. Like, that's huge. Okay, and this one does pay dividends as well. The next one is Mfa Financial. I'm currently up 20%, $817. This pays dividends as well, and this pays quarterly. The next one is an ETF. This is the first ETF that I bought, and at the time I didn't really understand what ETFs were about. I'm currently up on this one 20% as well, which happens to be $216.40. Okay, so that's really, really cool. I don't even know how many different companies are in this particular ETF. I've never looked it up. That's kind of funny. I guess I can look it up right now. What is this? VYM. Let me see here. Vanguard. I'm gonna scroll down to this guy here. We're gonna select him for a second. Then we're just gonna go back and put VYM and see if I can find information about VYM. Okay, cool. So, all right. So I found information about VYM, and this is a 4 out of a 5. Let's see. Okay, 411 companies. I never knew that. Here we go at the bottom of the screen. 411 companies. And if I had invested $10,000 10 years ago, it would be worth right now $35,000. Okay, let's see who the top 10 companies are. JP Morgan, Johnson & Johnson, Home Depot, Procter & Gamble, Bank of America, Comcast, Exxon, which I do have individual shares of Exxon, Pfizer, Cisco, and Verizon. These are solid companies which all of us know, or at least should know. Okay, cool. I've never looked up VYM, so now I know. So yeah, I'm up with this one 8%, which happens to be $958 because I have so much money invested in this particular ETF. $12,000 invested in this ETF. Interesting. As I'm looking at it, I'm thinking, I could be making more money elsewhere, but you know, of course, we always want more. Okay, the next one is Apple. On Apple here, I'm up 17%. Apple, once again, is the largest holding in my account, in my portfolio. So I'm up 17%, which is $13,643. I bought Apple on the day that it split, which was in August of 2020. And the reason why I bought Apple was because it's Apple. And one of my buddies called me up while I was at the gym and was like, yo, you know, Apple's splitting today. Are you going to get some shares? Apple and Tesla. And like straight up, that person kind of saved me because those two have really been beneficial in my portfolio. So as you can see way back here in August 31st, 2020, I spent $54,000 with Apple, which at the time was $125.55, as you can see. And then September the 4th, I grabbed some more shares, which was for $117.47. And then on October the 1st, I grabbed some more shares, which at the time was $116.91. Okay, and then I bought more shares in December, which at the time was $121.83. Now, the rest of the deals here are basically dividend payments, except for this last one at the top when I bought a lot. I bought $9,000 worth of shares for $149. I'm laughing because Apple is cheaper than that right now, right? Let's see what Apple is trading for right now. Let's see. So Apple's trading for $148.49. Now, of course, since I bought it at $149, like it was trading for $139 at one point. Okay, the next one is Tesla, of course, which super excited about. As you guys can see, Tesla went on a rampage today. It's up $115, and I'm currently up with Tesla 106%, which is $36,000. I couldn't be more happy with that. Okay, Tesla does not pay dividends, of course. Okay, the next one is VGT, which I talked a little bit about earlier. Currently, my total return is 4.15%, which is $1,081. And then the last position that I have is VUG, which is also an ETF, and I'm currently up 8% on that, which is $958. So currently my portfolio overall right now, and this is live, right, $267,000. And of course, since I started the video, the portfolio has gone down a little bit, right? So I think I started in like at 4 o'clock or so. So it's like 268, right? So it's gone down, you know, as you guys can see, which is to be expected. That's what the stock market does. It goes up and down all day long. So currently I'm sitting at 267,000, which I couldn't be more happy. For the last year, I'm actually up $79,000, which is ridiculous. And then all time, as of now, I'm actually up $21,000, which I'm super excited about. Okay. Once again, there was this time here when I was down negative $63,000, which was October 30th, 2020. At least that's what it's telling me on the screen. I was down negative $63,000, and that was a very, very painful time. So I'm glad that I have been able to, you know, learn as I go, and more importantly, share that with you guys. You know, as a result of that, hopefully you guys will get some value out of that, and you guys will be a little bit more motivated to take action. This channel is not about boasting. This community is not about boasting at all. You know, there are people that have a lot more money than me that are doing, you know, channels like these on YouTube. And then of course, there's people that have a lot more money than me that don't do any channels at all on YouTube. So it's always interesting when people are like, you know, like somebody made a comment like, oh, you know, you must be so proud of yourself. You got all this money and people are struggling from coronavirus. And I'm like, yeah, sure, I have all this money, right? But like, other people have way more money than me, you know. Very grateful for where I am, and the purpose of this channel is to share my investment journey, to encourage you guys to start investing. You know what I'm saying? And it's really good and easy now for me to want to invest because I'm in the green. But when I was in the red, you know, when you're down $63,000, or if it's $630, whatever it is, it doesn't matter the amount, right? The fact that you're down makes you feel some type of way, and it's not very motivating. It's easy to do something when you're getting positive results, you know? But I just wanted to share that with you guys. Once again, this is a live stream. Be sure to smash the thumbs up in this video. I would really appreciate that a lot. It helps the channel tremendously. If you're not subscribed to the channel, please don't hesitate to subscribe. I'd love to have you as a subscriber. If you're watching the live stream right now and you want to slap a comment in the comment section or the live stream, feel free to do so. If you have a question, I will try to answer. I'm not anywhere close to being a guru. You know what I'm saying? Like, this channel is not going to be about talking about the fundamentals and talking about how to study earning report. None of that stuff, because I don't do any of that. I don't. And the thing is, you don't have to do that to make money in the stock market, and you don't have to do that to be successful over the long haul in regards to investing in the stock market. Angela says, a tech ETF sounds good to me. Yes, ma'am. You know, I'm very encouraged by those things. To be honest with you, the ETFs it's one of the best things that somebody can do, you know, and all you do is you just continue to put money into that account, whether it's weekly, whether it's bi-weekly, whether it's once a month. Just continue. Don't worry about what's going on in the market per se. Just continue to invest. You know, if it's $100 a week or $100 a month or $50 a month, just keep pouring into it. Light Invest says, what's your portfolio amount? Okay, by now I'm sure you've seen it because I'm just getting to your comment, which you made a while ago. Number 11, not sure what number 11. Oh, you're number 11 on the thumbs up. Thanks, bro. I appreciate that, man. Thank you so much for giving this video a thumbs up. It says, I've been loading up on any lately. Any, I think I've seen you in the comment section before talking about that. Off the top of my head, I don't know what any is, so I'm gonna look it up real quickly here. Okay, I see it here. on Robinhood. I'm pulling it up. Interesting. Well, there's definitely a lot of movement in regards to this particular stock. I don't know anything about it. Is this the one you're talking about? The Rob Father? Is this the one you're talking about right here? Spear 3D? Let me know in the comment section real quickly. So let's see here. No, they don't pay a dividend. Okay, cool. Yeah, I definitely have seen that you've mentioned this a couple of times in the comment section. Okay, so for the last month, they're actually up 17%. The last 3 months, they're up 132%. Ding! The last year, they're up 300%. Of course, okay, the last 5 years, interesting. Now, that's quite interesting. It's like, well, the last 5 years, they're down 101%. That's definitely interesting. But you know, it all just kind of depends. I mean, to be honest with you, I am very gun shy when it comes to certain things. You know, a lot of people talk highly about like, you know, crypto and like do this and do that. And I'm like, listen, after being down $63,000 and crawling myself out of that hole, right? Once again, I was getting success little by little, right? Success is you're down 63,000. Now you're down 60. Now you're down 59. Now you're down 57. And it's a slow process, right? So it makes me a little scared to do anything or try something new. The fact that I'm trying to do day or swing trading over on my Webull account, I struggle with that daily because I'm like, I should just invest that money in an ETF or invest that money in Apple or invest that money in Tesla, right? But I'm like, no, let's see if I can grow that account and kind of provide different content while trying to grow that account. Now, once again, I'm never going to be talking about technical and fundamentals, and I don't think I'll ever be talking about any of that stuff. You know what I'm saying? I just won't. But we shall see. Wyatt says your videos are good. Enjoy all the info you give on your videos. Wyatt, thank you so much for the kind words. I appreciate you, sir. And thanks for stopping by and taking the time to comment. The Rob Father says the mine Bitcoin, they have like 70,000 mining rigs on order. Dude, Rob, straight over my head, bro. Shaping says thoughts on Realty income. I've seen they're merging with okay, Realty income is very solid. Realty income is definitely one of the dividend paying companies that I should have had or I should still have investment with. When it comes to investing in the stock market, there's so many companies to invest. There's so many ways to go. Realty income is a very, very good one to invest. Period. I mean, that's the end of that. You know, and the fact that they pay monthly is always exciting for me personally. Wyatt says, have started to invest in dividend stocks. There we go, Wyatt. There we go, man. Hey, don't be afraid to do some research about some of these ETFs. You know what I'm saying? Like I talked a little bit about ETFs earlier in this video. Like VGT is a good ETF. VUG is another good ETF. I'll just type it into the chat here real quick. And you guys can do your own research. VGT, VUG, VOO, VTI. And of course, there are a lot of different ETFs as well. But those are some good ones to kind of start with and kind of start to understand. You know, you can just Google on YouTube. It's a Vanguard ETF. So you can look up VTI, right? And like what makes up that particular ETF. How many companies are in that ETF and what are the top 10 positions? As a matter of fact, since I'm talking about it, I'm curious to know what are the top 10 positions in VTI. So I'll look it up real quickly on my side here real quick. Let me see, VTI. Okay, and I'll share my screen with you guys. So VTI is basically the total stock market index, right? So this is based on the total stock market. They're going to have a gang load of companies, over 3,000 companies. So right here on the screen, if you had 10,000 invested 10 years ago with VTI, that $10,000 would be worth $48,000, $46,000 right now. Okay, so currently there are 4,025 companies in this particular ETF, and this is basically based on the total stock market. Okay, here are the top 10 companies. As you can see, Apple, Microsoft, Alphabet Inc., which is Google, Amazon, Facebook, Tesla, Nvidia, JP Morgan, Berkshire Hathaway, Johnson & Johnson. This is a very solid one to invest in, just the total stock market. Of course, there's VOO, which is based on the S&P 500. So I'm going to look that up real quick. Here we go, pulling up VOO. And as you guys can see, this is a 4 out of a 5. If you had $10,000 invested 10 years ago, it would be worth $46,000 right now. There are 510 companies in this particular ETF. And as you can see here, the top 10, Apple, Microsoft, Google, which is Alphabet, Amazon, Facebook, Tesla, Nvidia, Berkshire Hathaway, JP Morgan Chase, and Johnson & Johnson. These are almost identical to VTI. Okay, so this is not a bad place to start, and it gives you instant diversification, right? Which is very, very important. You don't want to, only invest in just one stock. So that's kind of my 2 cents on that. To be honest with you, let's see. The Rob Father says I have AGNC. And PSEC for monthly dividend payments. Yes, sir. Those are good ones. I have those as well. Shaping says JEPI is very good for high dividends and safety. My largest holding. Yeah, I've definitely heard about that one as well. And I'm sure I've pulled it up and looked at it. There's just so many different directions you can go in regards to the stock market and investing, and different places you can put your money. You can put your money in individual stocks. You can put your money in index funds or ETFs. You know what I'm saying? There's so many different things, and we're not even talking about crypto. I had a small position with Dogecoin, and I actually sold them last night because I was like, you know what? Let me take some profits because I had it. And it went up to like 70 something cents, and I didn't even sell at that point. You know what I'm saying? And I should have just sold and taken some profits. So like yesterday, I decided to sell and take a little bit of profit off the table, and I'm sure I'll buy some more at some point. William says I am a buy and hold investor. So in the case of Apple, I have owned it for so long. My average cost is $39.97. Yo, that is beautiful, my friend. Jesus. Yeah, I wish I had the knowledge, to think about having shares of Apple when Apple came out with the iPhone back in 2008. You know what I'm saying? Granted, back in 2008, I didn't have a lot of money to invest, but it would not have mattered if I just continued to buy shares of Apple from then until now. I'd be sitting real pretty. But, such is life, and that's what it is. But I'm going to start from where I am today, and that's what I encourage people to do. Start where you are today. Don't worry about, oh, you missed it. No, you didn't miss it. You just didn't know, and you are going to start now because now you know. You're going to take action now, which is the smart thing to do. Wyatt says, what kind of yield percentage do you look for in your dividend stocks you invest in? Is it 10%? Is 10% too high? Yes, 10% is definitely too high. I definitely have some risky dividend paying stocks because the yield is so high. Like ARR is a prime example. ARR is a absolute prime example, but because of the fact that I have so much of my portfolio with Apple and Tesla, I'm confident that everything's going to be all right. And then I've shifted and added a huge position with VGT as well as VUG, right? So with Apple, I had I think it was like $69,000 initially, and then with Tesla it was like $30-something thousand, right? Like back in the day of the initial investment, right? And now I have $26,000 with VGT and another $12,000 with VUG, right? So it gives me diversification. Just having those 4 things that I just listed, right? Of course, I have Exxon, which is obviously a good one to have, but having Apple, Tesla, VGT, and VUG is huge, because VUG has Tesla in it and it has Apple in it. VGT also has Apple in it, right? So it's pretty crazy, but I feel very confident with those 4 things alone. Like I could I could sell my position with every other company that I have and only have investments with Apple, Tesla, VGT, and VUG. Okay, literally I could do that, but that would be a little boring. So I'm not going to do that. And I want to see this dividend snowball thing happen over time. You know, it's not like I'm running out of time anytime soon. I'm 43. I definitely have some years to go, so it's all good. Yeah. Anyway, I'm going to wrap this video, guys. If you haven't subscribed to the channel, be sure to subscribe. Please give this video a thumbs up if you find it valuable. I would really appreciate that support. And of course, I'll be back on here doing more videos and sharing my dividend payments and sharing purchases that I will be making. Now, it's funny because I've kind of taken a break from purchasing because I have quite a bit of money in my Webull account. I think I initially started with I think in my account there's like $28,600 in the Webull account. Now the value of it is a little bit more than that. I think it's like 35 right now because I've been buying and selling. Let me just show you guys that since we're on here talking about okay, so I'm about to open my Webull account, doing my little Face ID. Okay, so like right now my account is currently valued at 35,000. Okay, I like this a lot because I'm trying to do different things. If I show you guys my profit loss, this way? Which way? This way. Here we go. So my profit loss in the last 6 months, right? You guys can see I'm up $6,517. And so where my thumb is, my other fingers, my index right here, you see it says 6M. So it's the 6 month. So in the last 6 months, once again, I'm up $6,500, and I'm just trying to grow this account. You know, I'm just trying to see what I can do as far as that is concerned, and I'm just trying to take my time. Oh, whoa! I tried to show you guys, but it didn't work. Oh no! Oh, you guys saw it. Look, I'm losing it. I was like, I didn't share my screen, but you saw because I showed you guys on the camera. All right. Anyway, that's going to be pretty much it for this video. I thank you guys so much for stopping by. I will be doing more live streams in the future. Be sure if you're not already subscribed to subscribe. All right. Thank you guys so much for watching. Once again, my name is Dwayne with My Investment Journey, and I approve this video. I'll see you in the next video. Until next time, take care and be blessed. Peace.